Hi there! With July behind us, I bought a new stock to add to my daughter's dividend portfolio. Watch the whole video to find out which stock I bought and why. Welcome to my channel where you can follow my journey to set up and maintain a dividend portfolio for my 4-year-old daughter. It's August 2020. I bought 8 dividend paying stock and give an overview of the portfolio and the market in July. I'll take some time to analyze a couple of stocks in the sector and buy, in my opinion, the best option at this moment. If you are new and like to follow my journey and see the dividend portfolio of my daughter grow, then please consider subscribing. I upload a new video each month at least. Let's do a small recap from my previous videos. I've bought 7 dividend paying stocks: APD, Disney, 3M, Waste Management, AT&T, Pepsi and my last, Atmos Energy. All in a different sector and with 9 sectors defined by eToro, the broker where I hold my daughter's dividend portfolio. I am close to having a stock in each sector. The idea behind this diversification is to reduce the risk of the entire portfolio, even in a situation or crisis where we are in now. With diversification, it's more likely to have a solid portfolio that can withstand most ordeals and can keep on paying in the future. With 2 sectors left, I pick one sector and review 3 potential buys from this sector. But first, let's look at what happened in the stock market in July and where the portfolio is standing right now, before we go over to the stock I bought for August and why. In July, the S&P 500 went up from 3100 up to around 3200. However, my portfolio went up a tiny bit, with 2.9% in the green on the 1st of August. Looking at the portfolio, we see that compared to last month, one half of my portfolio is up, the other half is down. Waste Management, Pepsi, Disney, and my latest stock, Atmos Energy, went up. Atmos Energy even with 6%. And Disney is still up, but still largely in the red with 50% in the minus. APD, 3M and AT&T all went down a couple percent. 3M and AT&T both ended slightly in the red. Unlike June, July was not a good month for dividends for me. Not one company I own paid out dividends in July. With 7 dividend paying, except Disney, stocks in the portfolio and more to come, this may be the last month that goes by without dividends. I did not select the stocks in a way that each month I will be paid dividends, but the increasing number of dividend paying stocks, it is most likely that there will be a dividend payout each month from now. On my eToro account, which you can view using the link below this video, you can see the current status of the portfolio. Now let's move to what I bought this time and why. Because of diversification, like I mentioned before, I picked a sector in which I haven't bought a stock in yet. So I only have to look at the sector's financials and basic materials. And for no particular reason, I choose the sector basic materials for this time to look for a good dividend stock. Since I love the dividend aristocrats for their long sustained dividend payouts and rising each year, I looked into those options first to compare stocks and buy the best option in my opinion. I'm going to analyze Nucor Corporation, ticker symbol NUE, PPG Industries, ticker symbol PPG, and Air Products and Chemicals, ticker symbol APD. I will follow 7 steps or criteria to analyze the dividend stocks, similar like the 2 previous videos. I like this concept. A way to determine which stock I will choose from the sector basic materials, this time between Nucor Corporation, PPG Industries and Air Products and Chemicals. I choose these 3 because they are dividend aristocrats in the first place. Do you like how I work and want to buy the same stock as part of your portfolio with no effort? You can make an account at eToro and copy my trades automatically by using the copy trader feature. Of course, at your own risk, I'm not a financial advisor. Let's start with analyzing these companies. First, we take a look at what these companies do. In short, Nucor Corporation is an American producer of steel and related products, headquartered in Charlotte, North Carolina. It is the largest steel producer in the United States. Nucor is the North America's largest recycler of any material. PPG, or the Pittsburgh Plate Glass Industries, is a global supplier of paints, coatings and specialty materials. By revenue, it is the largest coatings company in the world. Air Products and Chemicals is an American international corporation whose principal business is selling gases and chemicals for industrial uses. Now let's start for real. The first step is to look at the dividend yield, the annual dividend paid divided by the stock price, and this times 100 to get the percentage. The yield between 3 and 7% is considered to be a good catch. The dividend yield at the time of making this video of Nucor Corporation is 3.85%, PPG Industries 2.01%, and Air Products and Chemicals 1.87%. The dividend yield of Nucor Corporation only is in the range between 3 and 7%. The second step is to check the dividend growth of 10 years or more, a sign of a solid dividend and a feature that is attractive for dividend investors. Of course, I already went for dividend aristocrats, so all apply. As a reminder, dividend aristocrats are part of the S&P 500 index that have increased their dividend payouts for 25 consecutive years or more. So of course this was the reason that I chose this beforehand, so all dividend stocks meet this criteria. Nucor Corporation has 46 years of consecutive dividend growth, PPG Industries 47, and Air Products and Chemicals has 37 years of consecutive dividend growth. PPG Industries has the most years, but all are well above the 10-year criteria. The third step is to look if the payout ratio is under 70%. The payout ratio is the amount of earnings paid out in dividends. The dividend payout ratio is the net income divided by the dividends paid, which ideally is under 70%. You do not want a company that pays almost every cent they earn to dividends only. If the company gets into some kind of headwind, then the first and only thing they can do is to reduce or cut the dividends to get ahead. As an investor, you want the dividends to grow and not to get cut or reduced. Nucor Corporation pays out 75%, which is quite high, a risk, and above the 70%. PPG Industries pays out 46% of its earnings out as a dividend, and for Air Products and Chemicals it's 64%. Both below the 70% and nice percentages with room to grow. The fourth step is to look at the 5-year dividend CAGR. The dividend CAGR, or compound annual growth rate, is a fast way to measure the dividend growth. A number you like to see is 7% or more, and if that is not met, then add the previous mentioned dividend yield. If they add up to 9% or more, then it's still okay. Nucor Corporation has a growth rate of 1.57%. Even with the dividend yield of 3.85%, it does not meet these standards. PPG Industries has a growth rate of 8.6%, and Air Products and Chemicals 10.26%. Both quite sufficient to meet this criteria. The fifth step is to check the trend of the dividend yield, a way to check the ratio of the stock price and the dividend payout over the years. We would like to see an uptrend where the dividend payout rises more than the stock price. I'll just check the last 5 years. Nucor Corporation has a straight trend and Air Products and Chemicals as well, although the graph shows an error in 2016. PPG Industries is on a slow rise, which is what I want to see. The sixth step is to look for the year-over-year trends of the revenue of a company. All companies see a decline in the first quarter of 2020, and for the 12 months ending June 30, 2020, Nucor Corporation and PPG Industries had even a decline of 25% in the first quarter. They all had a decline from 2019, so all not so good. The last step, number 7, is looking for the increasing year-over-year cash flows. All have a positive free cash flow, which is good and better than last month's picks, which were all negative. And with the crash in the first quarter of 2020, all the trailing 12 months numbers are lower than before, so all are not perfect, but you can see a slight increase in all when take out the trailing 12 months. Now to look at an overview of the steps and the results. Nucor Corporation only meets the criteria for dividend yield, step 1. And all 3 stocks meet the dividend growth of more than 10 years, step 2, and are even dividend aristocrats. Air Products and Chemicals and PPG Industries meet the criteria for the dividend payout ratio in step 3. and meet the criteria of step number 4 of the 5 years dividend CAGR easily as well. Nucor Corporation does not even when the dividend yield is added. Step number 5, the trend of the dividend yield. Nucor Corporation has a steady trend in air products and chemicals as well. Not bad, not good. PPG Industries is on the slow rise, which is what I want to see. For step number 6, the year-over-year trend of the revenue, we all see a drop from 2019, so not so good. For step number 7, all a positive free cash flow, and if we take out the trailing 12 months, all have a slight increasing, so not good, but definitely not bad. There's not one dividend stock that fully meets these criteria. One does perform better at some criteria and vice versa. But I've chosen PPG Industries from these 3 to buy. It shows slightly better results according to the criteria. I have to say it was a close call with APD. Nucor Corporation looked good as well, especially with the higher dividend yield, but PPG Industries showed with the payout ratio and the dividend CAGR more room to grow in my opinion. Remember, I'm not a financial advisor, this is for entertainment and a bit of educational purposes only. Any investment has risks, so do your own research. So I found my stock to buy in the sector basic materials. And when the market opened on the 1st of August, I bought for $50 0.46 unit of the PPG Industries stock, my 8th stock for August. If you like this video, please consider to like this video and subscribe if you haven't already. It helps me to grow this channel. Thanks for watching and see you next video.